to Good Money Moves, the show where we share financial tips and advice to help you feel financially empowered. My name is Jenna Taubel. I'm the AVP of Marketing here at First Alliance Credit Union. And joining me today is Devang Patel, one of our member advisors here at the credit union. And we are talking all about CDs today and how you can use them to help grow your savings and become just a little bit wealthier, which we all want to have. But before we dig into that topic today, Devang, share a little bit about yourself. What do you love doing here at the credit union?
So I joined First Alliance around 4 or 5 months ago as a member account advisor. And in the last month, I've actually got promotion to a member lending advisor. And eventually I'll start help our members get loans, help them qualify for them. And I've started my training for that. So now I'm extremely excited. In about 2-3 weeks, I should be able to do those and can't wait for it.
Awesome. Well, I'm so glad to have you here. Let's dig right into our topic today, CDs. So let's just start with the most basic thing we can start with. Define a certificate of deposit.
So a CD is basically just a savings product that most banks, most credit unions offer. And it's basically saying you're going to lock in a certain amount of money for a set period of time with a guaranteed fixed interest rate. Mm-hmm. So let's say, for example, you have $1,000, you will say you're going to lock in that $1,000 for 6 months for a 5% interest rate, meaning after 6 months you're guaranteed that on that $1,000 you'll make $50.
Perfect. That's a great explanation of that.
Yes.
So without having to ask this question, I think our listeners kind of already know how they're a little bit different than just a typical savings account. But talk a little bit about how, a CD functions differently than a savings account.
So there's one major difference between a CD and a savings account. With the savings account, you have a bunch of flexibility and it's more fluid or more liquid. Mm-hmm. With the savings account, if you have money in there, you are free to move that money wherever you want. You could take it out whenever you want. You could put it in whenever you want. You do whatever you want with that money. With the CD, you have only at the initial contact is when you could put the money in to a CD. So if you put $1,000 at the start date, you are not allowed to take any out and you're not allowed to put any in. So whatever you put in at the starting date is all you could do, and you have to wait till the maturity date to get that money back. Yeah. Unless you can do it earlier, but with that there's a withdrawal fee, but other than that, that's the biggest difference. And another one would be CDs offer a much higher interest rate compared to savings, which makes the CD, depending on the situation, a better investment.
Yeah. So that's a really great kind of explanation of how those two things work in comparison to each other. So thank you for that. You did mention that there may be a penalty to withdraw funds before that term matures. Can you talk a little bit more about that? And how do the penalties work? Are you feed? Do you just not get all your interest? What does that mean?
So when you get a CD, you're basically signing a contract in a sense, saying you're going to put in a certain amount of money for a fixed term. So for example, let's say it's a 1-year CD, so 12-month CD. You are basically promising that for that 12 months you will not touch the money. You're going to let it sit there, and we are guaranteed the money. For whatever reason, let's say a situation comes up where you need to take that money out before the 12 months, you are charged a fee on that. That fee is usually calculated based on blank month's interest rate. So for example, for a 12-month CD, we would probably charge around 3 months of interest. Mm-hmm. So if you take it out after, let's say, 6 months of being in that CD, yes, you'll make a bit of money on it, but at the same time, it won't be worth that, the product itself.
Sure.
But if you take it out, let's say you do a 12-month CD and you take it out in the first month, you'll probably lose money on that, which is why you want to be pretty promising, that you won't touch that money, and that's when it's a good time to invest in a CD.
Yeah, no, that's a great point. And, also, for our listeners who are maybe just learning about CDs and a little bit hesitant, I don't know that I want to lock my funds up for that long. What if something happens? I think it's good to know that, yes, you can actually access that. It will just cost you a little bit in that interest. And so if that kind of helps alleviate any concerns about locking those funds up, yes, you still technically, it's your money, you will have access to it if you need it, but because you're kind of, to your point, breaking the contract a little bit, there is a little bit of a penalty to that, and that's going to vary based on how much funds you have and how long that term was and what that interest rate was at the beginning. So it'll vary based CD to CD. I want to dig a little bit into term lengths with CDs. You've mentioned like 12-month and 6-month terms. Are all CDs shorter terms like that? Are there even shorter terms? How far out can you go with a CD, and does that vary by institution?
It will vary by institution. I know at First Alliance Credit Union, our shortest term is 6 months, and I believe our longest term is around 10 years. That being said, the shorter the term is, the higher the interest rate will be, and the longer the term is, the less the interest rate will be. Other than that, I know some other institutions will offer 3-month CDs. We don't. But the biggest difference is also, it'll vary based on situation, what type of term you want to choose. The way I like to think about it is 2 factors. First, the flexibility you have with the money, and second, your interest rate. So if you believe that in the next few months you might need some money, or in the next year you might need some money, maybe a 6-month CD is good to invest because you'll be able to get the maturity date in 6 years. At the same time, because the interest rate is high, or it can be high, if the interest rate changes if the interest rate drops, then after 6 months, that interest rate will also adjust based on whatever the Fed decides, and it could drop or it could increase. So the volatility of that should impact your decision on CDs, which is why long-term CDs could also be beneficial, because if you think the interest rates are really high, you're locking in a high interest rate for 10 years, guaranteeing that interest rate, and which is why a longer CD would be. The only downside in that is your money is locked for 10 years, so you can't use that unless you do the withdrawal, and you get the penalty on that.
Right. Yeah, and I'm just going to kind of recap a little bit of what you said, because I think it was really important and insightful a little bit when it comes to deciding kind of where to stick your money, because you mentioned the volatility of interest rates, which is important. So, like a lot of financial deposit products, savings, checkings, money markets, for example, all are going to vary in their interest rate, and you're not guaranteed any one interest rate at any particular time. But with that CD, when you kind of sign on to that, contract, and you get that certificate of deposit, right? You have a guarantee of that rate, instead of being concerned like, oh, well, it could go down tomorrow, or it could go way up, and then I'm losing out on, money and, those types of things. So I think you brought up a really great point around that. So thank you. One thing I do want to talk a little bit about that we haven't really talked about in a lot of other episodes, actually, and we don't have to go into detail, but are CDs federally insured by the NCUA the same way that savings, checkings, money market accounts are?
CDs are insured by in our term, because we're a credit union, the NCUA, and if you're a bank, then the FDIC. For each account that you have at an institution, they are what was the term again? They're insured.
Yeah.
So if you have, for example, if you have a CD and you have a savings account and you have a checking account, each of those accounts for each account holder is insured up to $250,000. So if you are a joint account with someone, you have an insurance, or you're insured for that account up to $500,000. So if you are planning on making, let's say, a $500,000 CD on an individual account, I would suggest creating 2, one for $250,000 each. That way, if anything does ever happen, both of those are insured.
Sure. That's great. Perfect. Thank you for explaining that. And if we could do a whole episode about NCUA insurance, it gets complicated quickly. But yeah, you gave a really great rundown and overview of it, so thank you. One thing I do want to talk a little bit about, because you kind of alluded to it a little bit in your explanation just now, and that is CD laddering. So making sure that you have funds kind of available to you at different points in time. Can you talk about what a CD ladder is, and kind of how are some different ways you could structure that or think about structuring that?
So I actually wasn't really aware what CD laddering was until quite recently, but I figured out that a CD ladder is basically saying, we'll do an example because it's always easier with an example. If you have $3,000, instead of putting the $3,000 into one CD, you're going to do 3 different CDs. One CD for $1,000 at 6 months, another CD at $1,000 for 12 months, and another one at 18 months. That way, in 6-month increments, you always will have some sort of, you'll be getting your money. So you're not afraid of not having that money a year from now or 18 months from now. And at that point, if you don't need the $1,000, then you reinvest it again at the next 6-month term after the 18. So that way, at 6-month intervals, you are pretty much securing that you will have $1,000 that you'll be able to use.
Yeah. Perfect. That's a perfect explanation for it. Yeah. So just kind of like, if you think about like the rungs of the ladder, you're just kind of slowly kind of rolling funds over and on top of each other, so that over, that 18-month period or whatever structured time frame that you have, you're not locking up funds that you think you might need, but you still want to take advantage of that higher interest rate. Over that kind of just keeps rolling, and you kind of keep climbing that ladder until you need to pull out some of those funds to use it for something. So perfect. Let's talk a little bit about goals, financial goals, and how do they fit with CDs? Like what are the best kind of purposes for a CD? Why should somebody use a CD to help them? Is it a good spot for emergency funds? Is it a good spot? Why should you put your money in a CD?
So I would suggest the best use for CDs could be any product you want to buy in the long term. For example, let's say you have a car you want to buy, or you want a down payment on a house. CDs would be perfect for that, because you're going to get a high interest rate on it, but you also know that you won't be needing to touch that money 2 or 3 years down the road. That way, if you keep it in a CD, you're guaranteeing that a higher interest rate compared to a money market, compared to a savings account, it'll be making money. On the other hand, if you're using it as an emergency fund, I would highly suggest against that, because if you do need that money in the next month, you will be paying that withdrawal fee, and that not only are you using that money now, not only are you having a fee on that, but now you're going to have to waste that on the emergency funds.
Yeah.
So use that money wisely on any savings that you need to do for the future, in a sense. So if you have a car you want to buy, if you have a house you want to buy, starting a CD for that specific purpose would be an amazing option.
Perfect. So it sounds like if you think you're going to need the money on kind of a whim or for an emergency, CD is probably not the best place for that because of that term that you've committed to. But if you have some of those longer term, well, it could be short term, 6-month goals, for some of that money, weddings or vacation that you have planned coming up in 2 years, and you just want a really safe place to kind of keep that money so you don't spend it on something else by accident. CD is a good way to kind of keep those funds separate and growing without having to really think much about it.
Correct.
Awesome. Can you open a CD for a child? Can kids have CDs?
I'm not sure about other institutions, but I know at First Alliance Credit Union, we do offer a youth CD, which I think is amazing because it also shows your child or basically the younger generation what investing is and how to get into it at a younger age, which I think is amazing. The cool thing about our youth CDs as well is that you're able to actually add money into that CD whenever you'd like, but you can't take it out. So let's say you start off with a $1,000 CD. If a month from then you could add more money into it. A month from then, you could add more money into it. So if the kid is doing chores of some sort, they're free to take that money and put it into that CD. And that way, they're making a much higher interest rate than just putting in a savings, and they'll be saving or investing in their future.
Awesome.
Yeah.
That's awesome. I like, that you brought up, sticking maybe their allowance money for doing chores and stuff in there. I also think about, that one aunt or that one grandma who still writes a check for every birthday, and kids don't know what to do with that. My daughter just got one, and she's like, what is this? I'm like, well, we're going to go deposit it at the credit union. Come on. So yes, that's a great use case for that, and to kind of help them build over time. And I think to your point, kids aren't going to have a lot of financial emergencies, so a CD is a great place to stick money for them. What about, I want to talk a little bit about auto renewal when it comes to CDs. It's not something we've brought up yet. However, it is a feature of CDs, especially here at First Alliance. So you have an option to auto renew your CD or not. Talk a little bit about how that works and what are the benefits of auto renewing, and when might you not want to set a CD up to auto renew.
Correct. So as you mentioned, there's two options you could do with the CD: non-renew and auto-renew. Non-renew is simple. Once the CD matures, it'll just go straight into your savings account. You don't have to worry about it. With auto-renew, it's basically stating that once you create that CD and it matures, you have a 10-day grace period after it matures to do whatever you want with that money, penalty free. So you can put it back into your savings account, you could transfer that money somewhere else, you could split that money, put half into your savings, half start another one. Let's say you have it set up for auto renewal and you don't do anything within that 10-day grace period. After that 10 days, it will auto renew to that same term for whatever the current interest rate is at that moment in time. A good use for this could be, once again, if you are, let's say, saving for a car in the future, you could put it on auto renew, and let's say you plan on buying a car 2 years in the future, but you do a 1 month or a 1 year CD. A year down the road, a month before it matures, you'll get something in the mail letting you know, hey, your CD will mature in a month. Just want to let you know, just keep an eye out for it. Then a month from there, you go into our credit union, you're like, hey, my CD is maturing today, I just wanted to withdraw it. You could do that perfectly, and we'll do it penalty free. If you have the funds at that time to buy your car, then you could take that money right out. If you know it's going to take you another year again, the auto renew will just handle itself and it'll just reinvest into the next 1 year CD.
Perfect. So it's kind of like a set it and forget it a little bit.
Correct.
If you don't have specific plans for that money as it's set to mature. So one last question, and then we have to wrap up because we're almost out of time already. It's gone by fast.
Quick.
I do want to talk a little bit about how can someone go about kind of making that final decision about when to start using a CD. And I know we kind of touched on it a little bit here and there, but what is kind of the ultimate pros and cons of a CD that somebody should consider to put their money in?
So to start off, I would suggest create a CD once you know your savings account has around 3 to 6 months of living expenses. So you could use that as emergency funds. If something goes wrong, you have access to that money. You don't have to worry about it, and you have something to take care of you during that time frame. After you have around 3 to 6 months of living expenses, if you have that remaining money and you know you want something in the future, you just want a higher interest rate on that money, I would say that is a good point where you could start investing in a CD. That way, on the extra funds, you're creating a much higher interest rate compared to savings account. Our savings accounts have a 0.3% rate compared to our CDs, which have a 3% interest rate. So it's a drastic difference. You're making so much more money on the CD, but at the same time, you just want to ensure that if you do need the money in the upcoming few months, then keep that in your savings account. But if you know you're not worried about those funds for whatever reason the next few months, next year, next 2 years, lock it in a CD and you'll make so much more on your investment.
Awesome. Well, thank you so much for being here today.
Thanks
You're
for
a
having
font
me.
of knowledge. Awesome. Well, thank you so much for joining us. This has been Good Money Moves. If you want to keep up to date on all of our episodes, make sure you like and subscribe. And if you want to learn more about CDs or how CDs work at First Alliance or any budgeting tips, anything you want to know that's financial knowledge, check out our website at firstalliancecu.com. And until next time, stay financially empowered.